Hello, it's Thursday the 22nd. I'm FxPlew and this is the market brief. Now, I left my air wheel and my gimbal in the car when I dropped it off in the garage last night. But what do they say? Adapt or die. So here we are under a tree. And if there was any lingering doubt over a rate hike this week, yesterday's inflation data put that to bed. Headline inflation was 8.7%. Unchanged, and it was the cost of foodstuff that cancelled out any drop in energy prices. Sunak and Starmer clashed over the cost of living crisis during Prime Minister's questions, and the Office of National Statistics believe there is little option but to allow the economy to fall into recession in order to curb rising inflation. While prices are rising across the board, it's the repricing of mortgages that has really garnered the most attention recently, with even more calls for government support for those due to remortgage their fixed rate deals, who will see huge increases in their monthly repayments. Of course, that's a ridiculous suggestion. It would alienate renters, amongst other things. Ultimately, where remortgaging makes a property unaffordable, that property should be sold. So perhaps this will be the catalyst for a long overdue property market correction. Fingers crossed for those on the market. Either way, we can expect this story to run and run while inflation remains high and while the Bank of England continues raising interest rates. Over in the US, Powell was on Capitol Hill testifying to Congress about the state of the US economy and the Fed actions to curb inflation. He struggled to justify the recent pause to rate tightening, and he hinted that rate hikes would return at the July meeting. Powell admitted that the Fed still are very far from the 2% inflation target, but he does still see this target as achievable. While the Fed still has plenty to do, Powell stated that it does make sense to moderate the pace of rate hikes going forwards. He wasn't clear on whether that means the Fed will follow the Bank of England with a 25 basis point rate hike at every meeting going forwards, or perhaps if they'll hike every other meeting as a more suitable approach to deliver the soft landing. But he does think a recession is less likely now. He even made a call for 1% GDP growth, which was up from a 0.4% call made in March. All this was not enough to support the dollar, though. The dollar index gave back most of the gains seen this week. That dropped to the 102 level as sterling topped out around 128 against the dollar. We kick off this morning from about 127.55 against the dollar, 116.10 against the euro, and euro dollar is around 109.85 on the open. Fingers crossed, business as usual, back tomorrow. All the best.
If you do not have a clue, then just tweet through and ask FxPlew.